How you doing? It's Sunday afternoon. This is a YouTube live video. I just got through shooting another video that I recommend you watch, and it's called How to Set Goals in Mortgage Protection, and basically teaching you how to scale to $100,000 a year part-time in the mortgage protection and final expense business. But today, I'm going to do a live video here real quick. It's called Two Paths of Success. And if you don't have two paths of success with your current IMO, then you should be looking for one that has two paths of success. I don't think I've clearly talked about this before in the past, but let's talk about it now. Two paths of success. In your two paths of success, and I'm going to abbreviate this so my back's not turned to you for so long. Two paths of success in mortgage protection and final expense. What does that mean? That means that you should be with a company that allows you to there's too many people out there that are these so-called YouTube recruiters, right? And just recruiters in general. And you find them on ZipRecruiter, you find them on Craigslist, all that, and and they never even put their name on an application ever. Which is the first thing I'd run away from. I mean, they have to be, if they're in order to mentor and coach somebody, I mean, their first prerequisite should be what? It should be they've done it before, right? Not book knowledge. I need you to know that you suited it up, put your uniform on there, and went out there and gave it the old fight right along with me before you're going to teach me anything, right? So that should be the number one criteria. But along with that, I want to have two paths of success, especially in this industry. Meaning, I want a path where I can come in and I can start at a certain contract or commission level, and I can go all the way up to the top of the comp plan without ever having to recruit a soul. That's the key. Again, too many lottery tickets being played in this business where you hope somebody's going to come in and you're going to hire them or recruit them, and they're going to be rock stars. You never sold nothing. You don't know how to put your name on an application, and yet they're going to be your lottery ticket to millions. And that's the major reason why we changed from our last IMO, because I don't like income caps. I don't think they're fair. They should be outlawed in my book. Not that we need any more regulation in this country, but that's one of my pet peeves, right? So what does that mean? Hopefully you can see my board with my small screen. But two paths of success means this. You should be able to come in at a minimum at 70% contract rate, okay? Now, I know some of you are already checking out there and saying, well, I'm at 100% contract rate at my IMO. Right, okay, I understand. And if you're at that level, that's fantastic. Congratulations. And I really mean that. That means you've worked hard, or you had a great resume and someone hired you at 100%. Look, there's a lot of companies out there that will hire you at 100% contract rate with no lead program, no platform in which to build your business on. But in this particular video, what I'm talking about is the ability to go from 70% with an IMO that has a leads-based, high quality, I have to say that, a high quality leads-based system with a platform design. Look, here's the bottom line. We have great technology, we have great administration, and we have great leads, right? So, but here's the deal. Those things are there in order to help you build your business. And we create value, you and I, in our business by what? Attracting people, plugging them into a system of success, and get them trained, get them connected with somebody that can mentor and coach them, and allow them to go up, move up based on their own production. Their value that we give these IMOs is what? We're distribution outlets, right? We give them applications. We go out there and sell their products. We turn them in, and that's what they're looking for. That's why we get paid so well in this industry. However, you should be able, again, start out at a 70% contract rate, and generally speaking, you'd be able to go up the comp plan 70%, 75%, right? 80%, 85%, 90%, 100%, 110, and 120, right? These are all promotion points based on nothing more than the business that you create. In other words, your APV, annualized premium volume. You should be able to move the comp plan every couple of months, right? So it goes something like this. Let's just say you start out at 70%, you do 7,500, with an APV for 2 consecutive months, right? You gotta watch that, because some of them are 3 months or longer. 2 months is about normal. Then the next one is probably 10,000. Let's see, 75% would be 7,500, right? And then 80% will be. I just want to get this to you. That's on average, okay? 10,000. Then you go to 12,500. Then you would go from there to 15,000, 17,500, 20,000, and 30,000. Whoops, right there. This is all APV, right? Analyzed premium volume. So if you do 30,000, that means you're doing about 30 applications a month. On average, about 30,000 be 30 applications on the industry average, which is what? It's $1,000 on average. Okay, I saw a little chat coming down here. Says there's no volume. I don't know why. It's on my phone, and it should be fine. If anybody else cannot hear me, say something real quick. I don't know why there wouldn't be any volume, but that is possible. Anyways, so starting out at 7%, you could get promoted every 2 months. Now, there's nowhere on this graph here that it says anything about what? Recruiting, right? Hiring agents, building agencies. I want to get paid what I'm worth, regardless. Look, I can't control what somebody else does, right? I can control what I do. I can't control what they do. So I want to make sure if I'm a top producer, if I go out there and I do $15,000 with APV, which would be 15 applications on average, $1,000 a piece. That's the national average. So 15 applications a month, right? Which is only what? Not even 5 a week. 15,000 a month. I'm going to be able to get promoted to the 90% contract rate. Now, look, I believe that if you want to build an agency, this industry is growing, and you're good with people, because you understand when you're building an agency, you're no longer in the insurance business, you're in the people business, right? So if you want to get in the people business and you're good at it, and you have a system that you can teach, and you know how to put your name on an application, I think that's great, right? And that's fantastic. However, your income should not be capped as a result of you not doing it, or the people that you bring in to your agency, and that's your IMO, right? It's all one company. Your business is inside their business. If they don't do anything, because you can't control that, they don't work for you. They're independent contractors, 1099. If they don't want to work, they don't have to work, right? There are no quotas in this business. At least there shouldn't be any quotas in this business. So if they don't do anything, and you do 30,000 in APV yourself, you should be able to get promoted to the 100% contract rate, right? Right? But there are a couple of IMOs out there, actually there's several of them, that will block you out right here. Meaning income cap. I keep saying gap. Income cap. Meaning you can never go to these higher commission rates, contract rates, without recruiting. Never. Right? And those people have to actually do something, which you can't control, right? So this is I talked about one of my other videos out there. I think it's the Beef Patty videos is one of them, but there's another video out there that I talk about as well. Is that it's toilet paper and leads, mortgage section leads. Go watch that video, okay? But you're giving up what? 40% of income between here and there, right? I'm not a great mathematician, but let's see. 120 minus 85 equals 35. I was close. So 35% income you're giving up because you signed with an IMO that requires you to recruit in order to get paid what you're worth. So you want, look, as soon as you get a comp plan that shows you all these available promotions, but then somewhere along the line, right, they give you a piece of paper called promotion guidelines or whatever you want to call it, right, and it says that in order to get to the 90%, to get to the 85% contract rate, you have to do X amount of dollars. I'm not pointing anybody out here at all. I'm just using it as an example. You have to do $32,000 in APV. Here it's 12,500, and you have to have 7 people on your team. 7 people on your team. 7. I can't use my other finger. 7 people on your team also participating in that volume, right? Here, you can go 85% contract rate with doing 12,500 for 2 consecutive months, and you're at the, I can control that, right? But how many people do I have to recruit, hire, recruit, whatever you want to use? I hate the word recruit, but I'm using it because that's what everybody else uses, and everybody understands what it means, right? And in this particular situation, because that's a network marketing type comp plan that requires you to go out and, hire a bunch of people and get them motivated to do something, and your income is capped until they do, right? But here, 12,500 puts me at the 85% contract rate. At some of these other IMOs, in order to get to 85%, I have to do $30,000 APV, and I have to have 7 people. And I'm going to tell you from experience, after 30 years in this business, in order to get 7 people that actually will participate in that volume, you're going to have to hire a lot more than 7, right? You're going to have to go through like 60, 70, 80 people, right? 10% is about average to get 7 to do something, all while taking time away from your personal production to try to get them in, trained, and producing. So you want to have 2 paths to success. You want to have a comp plan that allows you to go all the way up to the 120% contract rate with 0 income cap. And the minute they start doing you plus 7, you become a manager. This is network marketing. No digs against network marketing, but I'm not in the network marketing business. I'm in the mortgage section and final expense business, right? And I'm building an agency no different than Farmers, State Farm, New York Life, the New England. All these companies have a broker, and they hire agents, and they participate in what they call a multi-level marketing comp plan, meaning they create spread between themselves and their agent. Okay? What that means is, let's just say the broker is at 150%, or let's just say 120% since that's on the board, and you come in at 70, he gets what they call a spread. So between 120 and 70 is, I'm not good at math, 120 minus 70 is, he gets 50% spread on the volume that he creates. Now, that doesn't mean you get paid less. Everybody comes in at the same rate. It just means that he gets paid because he found you, mentored, coached you, trained you, and helped you on the way. And the carriers pay him that fee, not from yours, but they pay. That's the part of the contract. It's a broker contract. Same thing in real estate, right? Same thing in car sales. There's a lot of companies that work on a multi-level marketing comp plan. That's not network marketing. Network marketing is friends, family, and neighbors, and all your income is coming from recruiting. And by the way, we have some of those in this industry right here, okay? And I wouldn't recommend you do that. That's just my opinion. You can do what you want to do. Again, on this channel, I present the facts and let you decide what you want to do. But this is what you want. You want to have 2 paths of success. I want to be able to go all the way up to the top of the comp plan and get paid up to 120% in a leads-based sales opportunity without recruiting. And if I decide to recruit and build an agency, that's great. Then their volume goes along with my volume. Let me see if I can make that clear real quick for you. Remember, this is a live video, right? Okay? So what that means is that if I have 2 paths of success, okay, and I go out there and I do 10,000, I rest my board up here, 10,000 APV for the month, and I have, I don't know, 4, 5, 6 agents, and collectively, they all did 5,000, okay? My total APV for the month is 15,000, and I get promoted based on the total APV volume. I get paid. Now, I don't get paid the same amount of money here because you're getting the lion's share of that money, right? But I do get compensated, based on my spread. So if I'm at 90% and you're at 70%, I get 20% off of what you produce. Not a lot of money, but it can add up over time but I do get promoted based on the total ABV my organization brings in to the IMO. Remember, that's the value that we give or we create for the IMOs is we are a distribution channel. So the more distribution channels we have, the more volume that we give to the IMOs and to the insurance companies, the better our value is to that IMO, right? So we do get promoted based on the APV that are myself and my organization. But if they didn't do anything, I can still move the comp plan without building a team. So I get asked that a lot, 20 times a week. What does 2 paths to success? What's the most important thing aside from the technology, aside from the products, the carriers, the contract rate? What should I be looking for? Well, that's the one right there. I want to be able to come in at whatever contract rate you get hired at, go all the way up to the top, and I don't want to be forced to recruit or build an agency if I don't want to. There's a lot of people out there that have no interest in being in the people business, and you can't fault them for that, right? Because once you build an agency, like I said, you leave the insurance business and you join the people business, and not everybody's cut out for that. And you should be, if you want to do it eventually, you should have the right to do it. There are some IMOs, and I got 3 today, people that called me that asked me, what do you think about this IMO? What do you think about that IMO? And both of them did not allow you the opportunity to build an agency, right? And once you get skilled and you start making some money, you learn the basics of this business, you should consider building an agency. But you should not be forced to build an agency, and you should not have an income cap or a cap on your income because you are not ready or not prepared yet to build that agency. That's what I'm saying. So when you're ready to do it, this applies, and you can certainly take something you're not ready to do. Have a great day. Happy Sunday. Talk to you later. Bye-bye.